To keep yourself updated, subscribe to Indigo Learn and click the bell icon.
Friends, let's discuss about bank reconciliation statements. This is one of the important topics and you can expect about 5-6 marks easily from bank reconciliation statements. Now, what exactly do you mean by bank reconciliation statements? We call them shortly as BRS. Okay. Now, friends, more than 90% of transactions in a company generally happen through banking. You know, it's not easy to manage so much of cash physically, and also it is not legally permissible after certain limits. It's not permitted by taxation. If you really do that, there are bad tax consequences. If you really make payments beyond certain amount in cash and things like that. So, most of the businesses primarily depend on bank as the means through which they transfer monies and receive monies. And also, when this kind of thing happens, do we, as say we are company and there is a bank, so our company, let us call it A Limited, and the bank is ICICI Bank. Okay. Now, in our A Limited, when we receive cash, do we record that? Yes, we record that. Then, when we transfer that cash to a bank, do we record that in our books? Yes, we record that. When we transfer that cash to bank, will bank also record that? Yes, bank should record that. Fair enough. Then, when we receive a check, should we record that? Yes, we should record that. When we send a check to bank for clearance, should bank record that? Well, bank doesn't record that when you just send it for clearance. Bank will record that when that check actually gets cleared. Acha. You understand the small point here? When we send the check to bank for clearance, or when we receive the check, at that point itself we record it. So, we receive it and then we send it to bank for clearance. We will record it in our books when we receive the check, but banker records it in bank's records only when the check is cleared. What is the process here? We receive the check, we record it saying, amount received, say 1 lakh rupees. Then we sent that check to ICICI Bank. Say the check was given by Axis Bank. Then ICICI Bank presents this to Axis Bank, and in Axis Bank maybe some customer gave that check. That customer account Axis Bank will check and say, yes, we will permit amount of 1 lakh to be debited, etc. and that 1 lakh will be transferred by Axis Bank to ICICI Bank. Of course, when I say Axis Bank, that customer who gave check from that person's account to ICICI Bank, and then amount will come into the ICICI Bank account of our company. Now, banker will record it only when that amount is actually received. Acha. So, there is a gap between when we are recording and when the bank is recording. Okay. Then, if the transactions like we made payment by giving check. Now, I made payment, I gave a check to somebody. Will I record that or not? Yes, I should record it right away because I gave a check to a creditor. I have to make some payment. I gave a check to creditor. I should record it right away. But will the bank immediately record it? How does bank know? I am sitting in this room and giving a check to my creditor. I will record it. My banker will not know that I gave a check. So, when will bank record it? This creditor will take this check and give to his or her bank. That bank will present it to my ICICI Bank. Then ICICI Bank will check my account and say, yes, we are transferring money. That is when my ICICI Bank will record it. This process may take 2, 3, 4, 1 week or whatever kind of a thing. So, the point is there is still a chance of gap between when we are recording and when the bank records. Friends, if whatever we record exactly bank records on the same day at same amount, where is the question of reconciliation? Reconciliation assumes that there is a difference. Please understand. Reconcile, when I say reconcile, there are two friends, those two friends are fighting with each other. Then we would say, hey, come on, sit down and reconcile the differences. What is the meaning of that? They are fighting with each other and there is a problem. There is a problem. They are not agreeing on certain things. That is why we are saying sit down and reconcile. If they are already agreeing, where is the question of reconciliation? You get that point? The same way, if whatever we record in our books, same amount, same day, same way, banker also records, there is no question of reconciliation. But the problem comes because there are certain cases which we would record it one time, banker may record it some other time. There are also certain cases where banker send that check for clearance, for all the process what the banker has done, some 10 rupees banker debited to our account. Now, those charges, bank charges we call them, those charges banker debited and we automatically will not know those. Maybe you will get the statement and then you will get to see, but automatically you will not know that banker has charged that amount from you. So, you will get to know that maybe at the end of the month when you say, oh, on that day when I sent this check, banker has debited some amount. So, that you will get to know only when some check was received or some statement was received from the bank. Maybe you check that at the end of the month or once in 15 days, things like that. So, friends, the point what I am trying to say is such things also may happen where banker has recorded certain things in your account in the bank and you don't know that, so you haven't recorded. So, still there is a difference. This also needs to be reconciled. Then, maybe a customer after buying goods from you on credit silently went to your bank and transferred money and deposited money into your bank. So, in a case like that, money came into bank. We haven't recorded that in our books. Is that also possible? Quite a possibility. So, friends, there is a big spectrum of things, big range of things that are possible for differences to arise between what we record in our books and what bank records in bank's records as in our account. Of course, see, we go to ICICI Bank, we open an account. So, we will have an account with ICICI Bank. All our transactions ICICI Bank will record under that. Yes or no? Right. So, ICICI Bank will record our transactions in the account that we have with ICICI Bank, as simple as that. So, we will record all those transactions in our books by maintaining something called as ICICI bank account. We will maintain that in our books also because I transferred 10,000 to my bank. So, I have to write that and then banker says, I received 10,000 rupees from you. So, that banker also should write, correct? So, like this you have a range of things which happen through bank, and friends, it is it's a clear lie if any company says my bank balance as per what I have in my records and what bank has as per bank's records is exactly matching always. I don't believe that because there are so many reasons why there could be differences between the two. Difference alone does not mean there is a fraud. Please understand. Difference alone does not mean it's a fraud. You have to understand that logically there is a reason for them to be different, and some differences are things where you can adjust them quickly. Some differences you have to wait. Something like, as I told you, maybe check was sent and you already recorded that, but bank will record that only when the amount actually hits the account. So, something like that. So, there are these differences. In this concept or in this subject called BRS, what we are going to learn, we will discuss what companies should do, how should they prepare this BRS, what are the instances which will give rise to these differences. So, this is what we are going to largely discuss. Now, to move forward in this discussion, let us understand, to say something is different, normally you should know what all things appear in our books and what all things normally appear in the bank's records. Let us first visualize that. Let us first talk about our books. In our books, we maintain an account called ICICI bank account. We have ICICI bank account, we are maintaining a record of that. Okay. Where do we maintain this? We maintain this in a book called as cash book. Sir, just now you are saying bank and again you are saying cash. Baba, in cash book, there will be a column called as bank column. Okay. So, I will simply call this as, to avoid confusion, bank records bank account as per our books. I will call it as bank account as per our books. Means this is cash book bank column. Bank account as per our books. Okay, right. Then there will be our account as per bank's books. Our account as per bank's books. When you go to the bank and give your passbook, banker updates your passbook. Now, what exactly is banker doing? Banker is updating bankers transactions which banker knows have happened in your bank account. Who maintained that bank account? You are maintaining the bank account. With whom? That particular bank. With what identity? There is an account number, under that you are maintaining all this. So, that is what the banker is essentially trying to communicate to you through that bank passbook. I hope you got that. So, friends, now let us spend some time to understand what will this bank account as per our books look like. Okay. Now, in our books, when we have bank balance, Is it good to have bank balance or is it bad to have bank balance? We have some bank balance. So is it good or bad? It's good. So is it an asset or a liability? It's an asset. So it's good for us. It is a strength for us. So we have bank balance. Very good. Now this bank balance what we have is, or bank account in our books is an asset account. Okay. So in an asset account, what all kind of things will happen here is what we should see. If you debit an asset account, asset will increase. If you credit an asset account, asset will decrease. These are basics, right? So when you debit an asset account, when asset balance is increasing, bank account, when will it increase? When something is received. So all inflows go into the debit of that account and all the outflows come to the credit of this particular account. Okay. Now there is opening balance. To balance brought down we will write. If there is a closing balance you will write by balance carried down. Okay, fine. Let's be done with that. Now what all possible inflows can we have in the bank account? So I am not talking about cash. I am talking about bank. I am talking about bank as per our books. Okay, right. When will we say that, hey, in my bank I received money? If you receive a check. If you receive a check, you would immediately say, I received check from so and so party, my bank balance will increase. Fair enough. Then some customer directly deposited money into your bank account, then also you would say that balance will increase. Then when will balance decrease? You made some payment, you gave a check, so then that balance will decrease. Then banker charged you some bank charges, then also the balance will decrease, and so on. So basically all inflows come into the debit side of that bank account and all the outflows go to the credit side of the bank account. Okay, keep it aside. Now come to our account which is maintained by the banker. Our account which is maintained by the banker. So whatever will be recorded in the passbook. Okay, right. Now friends, think about it. From bank's point of view, or if imagine in my books I am saying I have an asset, my money is with bank. But from bank's point of view, just think about it. Bank may feel, I have cash, but bank feels, I am managing not my cash, I am managing somebody's cash. So basically bank is appearing as an asset, bank balance is appearing as an asset in our books, but when you come to bank, for bank we are a liability. Think about it. For a bank we are a liability. Why am I saying that we are a liability? Because we gave money to bank. If somebody gives us loan, that loan, what we received, that we received a loan, okay, amount you got, but that party, that person who gave loan, that person will be somebody who is a liability. The same way here, when banker receives money from us, we are like a liability. So banker will keep us under liabilities. So banker received money, okay, banker's balance increased. Now when banker's cash balance increased, correspondingly, what is the adjustment in banker's balance sheet? Let us just go to that. Bank has a balance sheet. In the balance sheet, when you gave money to bank, banker's cash balance increased. Correspondingly, what happened? Correspondingly, a liability is increasing. Who is that liability? This customer account will sit in the liabilities. I hope you are clear about this. So that is how balance sheet of the bank also should tally. So what is the double entry effect? Cash balance is increasing, correspondingly liability balance is increasing. Alright. Now we are a liability for the banker. Here, if we are a liability account, in a liability account, if liability balance has to increase, what will happen to that? Liability will be credited. If liability balance has to decrease, then liability account will be debited. These are basics, right? So in an asset account, if you want to, if you debit the asset account, asset balance will increase. If you credit the asset account, asset balance will decrease. But in a liability account, if you credit the liability, balance will increase. If you debit the liability, balance will decrease. Are we absolutely clear about this? Right. Now friends, by taking this point into consideration, whenever we say that, hey, I received money in my bank, maybe here we debited, but banker would say, yes, we received some money. When banker receives money, is that asset or liability? Here it is a liability. So banker would say that party is a liability and that liability balance will increase. So friends, please understand, On one hand, in our books we are saying debit balance increased. Here the banker says credit balance increased. Similarly, when we give a check and the check gets, when we give a check or when we make a payment, then we are crediting the bank account that we maintain as per our books. But banker would say, yeah, liability balance decreased. Liability balance decreased means that liability should be debited. So simply, whenever you are debiting, banker is crediting in the banker's records, because bank is an asset for you. You are a liability for bank in the bank's books. Clear? Similarly, when you make a payment, you are crediting it here, but bank will debit your account in the bank's records, right? So, see, you will maintain records from your perspective. Banker will maintain records from bank's perspective. That is the basic point, okay? So, now, when there is a difference, you need to sit down with these two papers and say, how did we maintain this? These are all the points. Bank passbook. How did banker record all this? Achha. It may be bank passbook or bank statement, whatever, okay? Right. So, this is how bank recorded. This is fine. Here I debited, here bank credited, here I credited, bank debited. Oh, here I debited something, banker didn't credit it. Achha. Highlight it. Or bank debited something, I didn't credit it, highlight it. So basically friends, like this we will sit down with both these papers to understand where the exact difference is. Once you identify the difference, it will be easy to take the next steps regarding that. Okay, so this is the background to bank reconciliation statement. Now I will take a few cases and start discussing even the theory portion of BRS along with the problems what we solve in BRS. So when you look at the kind of problems which get tested in the examinations, we can broadly divide them into two categories. The first category is where the reasons for differences are already given to you in the question. Okay, so exactly, this check was given here, it was recorded here, it was not recorded there, like that exact reasons for differences somebody would have identified and they will give you the exact reasons for differences. That is one category. Then how do you deal with that? There are two approaches in which you can deal with those differences. You see, there are differences between two balances. One says 1 lakh, the other one says 1,50,000. Ideally, both of them maybe should have been similar, but you want to find the reasons why they are different. Then you will start with 1,50,000, work towards getting to 1 lakh. What are all the differences? Or start from 1 lakh and arrive at 1,50,000. So you are saying, hey, this is the balance as per bank passbook. These are all the changes. If you make, you will get to bank account as per our books. Or you can say, hey, this is the bank account as per our books. These are all the changes if you make, then this will be the balance as per bank passbook. So like that, you start from A, come to B, or start from B, go to A, something like that, so that we know, hey, these are the reasons why there are differences. So there is no mystery. So that's what you're trying to resolve. Okay, so that is what you would do if the reasons are given out in the question. There is also a possibility that reasons may not be given. You can simply have a question which says the balance as per bank account in our books is say 1 lakh and balance as per bank passbook is 1,50,000. Now reasons are not given. Then what do we do if reasons are not given? We need to find out reasons. How do you find out reasons? You will go to these, you will put these two statements one next to the other, and the differences could be because if something is debited in our books, it should have been credited in the bank's passbook. If it is not, then there is a problem. So you will flag that out. Similarly, something is debited here, it should have been credited there. Something that should have been, that is credited here, should have been debited there. So has it happened or not? You are trying to check. Similarly, maybe there are some surprising elements in the bank passbook. So you will check the bank account as per our records. You will check the bank passbook, and by doing these, you can arrive at those possible differences. So that is the other category of problems what we can have in our examinations. Now friends, we will actually take a few case studies to learn this in detail. Now imagine, as per bank account our books, we call it as cash book. Okay. and a bank passbook. What is bank passbook? Basically, bank's records or bank's books. Okay, right. Now, here we have ICICI bank account. When I say ICICI bank account, our account only, okay. So, we are maintaining with ICICI bank. Then, the bank is also maintaining, say, A Limited account, okay, right. So, I will just write it in a debit credit manner so that it will be clearer, okay, right. After all the adjustments, you find that by balance carried down 1 lakh. To balance carried down 1,50,000. Understood? So, there is a difference what our books are showing and what bank's books are showing. In a case like that, how will you resolve this is what we are now talking about, right. So, firstly, if there are differences like this, there must be reasons, okay. What all those reasons could be? Let us think about. We gave a check. So, these are inflows, these are outflows. But when you come to the bank, these are inflows, this is an outflow, right, okay. Now, here we gave a check. So, we gave a check to somebody called B. By B 50,000. By B 50,000. We gave a check. That check B took but did not deposit in bank. So, only when it is deposited in bank, our ICICI bank will get to know, but they haven't deposited in bank. So, is it seen in the outflows? No, it is not seen in the outflows. It is not seen in the outflows. That is why this 50,000 got deducted to arrive at our 1 lakh balance, but because that was not deducted, bank is showing 1,50,000 balance. Okay. Now, how do we reconcile this? It depends on where you are starting. If I am starting from this place, I would simply say, hey, 1 lakh is what I have as per my records. You have 1,50,000 as per your records, your bank. Okay. To my records, if I just add back, I am saying if I add back. Why add back? Earlier something was deducted. Now if I add back 50,000, our accounts will match. That 50,000 why I am adding back also I am clear, because as per me I gave that amount away, that person is yet to come to you and deposit that, but from my side check is already given. So we have already recorded that it will come to you and our bank account will be affected when that person comes and takes money from the bank. So from our side we are clear that 50,000 is because of this reason. So what did we do? To this 1 lakh balance what we have, we added back 50,000 and we are reconciling that with 1,50,000. Clear? This is one way. Now the same thing I can do in another manner. So here what I did was I added back 50,000 to 1 lakh. Instead I can actually start from 1,50,000. I can start from as if I am bank. Okay, now I am bank. Okay, now I am ICICI bank. I have an account of A Limited. Okay, I have 1,50,000. Hey, why do you have a difference? You have 1 lakh. I have 1,50,000. So we understood. Oh, I have 1,50,000 for you, but you have only 1 lakh. Acha. So from my 1,50,000, if I subtract 50,000, I will arrive at 1 lakh. So as if that check came to me, as if that a transaction has happened, then I think our balances are same, right? I said, yeah, correct. So to this 1,50,000, if you are starting from 1,50,000, you are trying to reconcile. When you are trying to reconcile, see, understand, mindset, how do you think about this is very important, because that is what will determine how easy or difficult this topic is going to get for you. So I am trying to, if I'm starting from the bank's place, I'm saying, oh, 1,50,000. So what did you do? You gave a check away. Acha. So that is why you deducted. If I also deduct that, then our balances are same. In earlier case, what did we do? We started at 1 lakh and bank was at 1,50,000. Then we said, oh, okay, if I also do like you, then our balances match. That is the thought process. If I also do like what you have done, our balances may match. So here, this 1 lakh, where if we were starting from our books, we said 1 lakh, oh bank you have 1,50,000, oh I deducted something, you didn't deduct, right? Okay, I will also do like you. I will add back this amount of 50,000, our balances are same. Or if you are starting from bank, you are saying it is starting at 1,50,000. Oh, what did you do? You deducted that, is it? Acha. So I will also deduct that. So if I also deduct that, our balances are same because it is just a matter of time. These balances are going to be same. So that is where the logic of BRS comes in. So friends, here check issued, not deposited. If I am starting from cash book to go to passbook, what do we do? If we are starting from passbook to go to cash book, what do we do? If we are starting from cash book to go to passbook, right now what we have seen is there was a debit balance of rupees 1 lakh. There was a debit balance of rupees 1 lakh. We said add back 50,000 to arrive at 1,50,000. So that is how you reconcile. If you are starting from bank passbook to cash book, there is a credit balance of 1.5 lakhs and we will say deduct 50,000. So that will make it 1 lakh. So ultimately you are trying to say, fine, after all these adjustments we are aligned. That is how you are trying to work it out. Now there could be another adjustment. Let us think of that. Now the scenario could be our balance is 1,50,000 and banker has 1 lakh. Banker has 1 lakh. Okay, right. Now if we have 1,50,000, then we are saying, oh, I think there is something that, you know, this for some reason I have more money as per our records. Okay. Now what could those reasons be? Maybe there was one check deposited 50,000. If there is something in inflow here, in inflow there also there should have been something, right? But there was nothing. There was nothing corresponding to that. So as per our records, we got a check and we sent it to bank for collection. We deposited that in the bank. But bank says, I haven't collected that money yet. If I haven't collected that money yet, how will I consider that into the credit of your account? So banker has not credited our account in the bank passbook. But we said, I received that amount, so I debited and I gave you, right? You should have credited. Banker says, yes, we will, but it is in process. It is in the process. Then what do we do? So friends, look at the logic here. Here, if I start from, again, to make it simple, if I start from cash book and if I want to go to passbook, from 1,50,000, how do I get to 1 lakh? From 1,50,000, how do I get to 1 lakh? So there I am saying the reason is that 50,000 rupees we deposited here, but that was not recorded. Okay, deduct. By deducting 50,000, we will arrive at 1 lakh rupees and say, fine, our balances are reconciled. Alright. Now, on the other hand, if I am starting from passbook and I want to go to cash book, so then I am saying from 1 lakh, I need to go to 1,50,000. So there I would say add 50,000. So earlier for cash book, it was 1,50,000 and we deducted 50,000 and arrived at 1 lakh. And for passbook, it is 1 lakh and yeah, we add 50,000 and we make it 1,50,000. So friends, it is not about what you are adding, what you are deducting. Bank reconciliation statement is not a ledger account. It is not a ledger account. It will not form part of main books of account. it is only a statement. What is the statement for? Reconciliation. Why do we need to reconcile? Because there are differences. Why are there differences? I told you, I gave a few examples why there could be differences, and these are quite common. For reconciling those differences, to adjust those differences and say, okay, I didn't miss out anything, you didn't miss out anything major, or while there are differences, we know why there are differences and we are okay with that. So to get to that point, we need to make this reconciliation. See, it is not that actually banker would go and change all the numbers in bank's records. It is not that we will go to cash book and change all the numbers as per our cash records. I'll tell you what might require change, but the logic largely what we are following is, when we are preparing this BRS, we are trying to see why there are differences and how, by understanding the logic. Okay, had this not happened, our balance would have been same. Had this not happened, our balance would have been same. Like that, we are trying to do those adjustments and prepare and present one statement that is called as BRS. So friends, now let us quickly take a few cases and we will go through this. If you are starting from bank book, from cash book, what do you do? If you are starting from bank passbook, what do you do? So that let us try quickly evaluating. So let's just have this as a common template, from this point onwards. So this is bank account, our books. That is our cash book. Then this is bank passbook. Okay, right. Now, what we are saying is, we are assuming to start with that in the bank there is balancing or closing balance here. When I say it has balance here, it means we call it debit balance. Here we are saying balance carried down. So this is credit balance. Okay. So this is the terminology. Okay. Right. So it means that we have money in the bank account. We have money in the bank account. Okay. Right. Now in a case like that, inflow, outflow, inflow, outflow. Right. Excellent. We will start taking case by case. What do we do if from cash book we are going to passbook, from passbook if we are going to cash book? Let us now start quickly discussing these points. Opening balance, debit. Opening balance, credit. What does this mean? This means that we have money in bank account. We have money in bank account. That is what it means. Okay, right. Now, so check deposited, not cleared. We already discussed this. Check deposited, not cleared. If check is deposited, what would have happened? Here the balance would have increased. Not cleared, what would have happened? Here the balance would not have increased. Okay. If you are starting from cash book, then what do? Oh, we increase the balance, right? To make it aligned with them, we need to decrease it. So we need to decrease from our balance what we have, so that we can arrive at whatever banker has done in the ICICI bank statement. Right. Then what should banker do? Banker has not recorded that. Banker has not recorded that amount what was received. If you are starting from passbook to arrive at the cash book, then what do? You need to add. You need to add this amount also, so that you would say, hey, you didn't record it earlier, right? Now you need to record it. So now in order to record it, you need to add. Add where? Not in the actual account. You need to add in the statement what you are preparing. Will banker add? No, banker will not do this BRS for you. You should only do BRS. So you will just play this game. Oh, as if I am banker, I am starting. Or as if I am myself and I am starting. So this is just whether I start from cash book to passbook or passbook to cash book. It is a game that I am playing. Banker is not going to do anything more than giving a bank statement. Are you clear about that? Right. Move to the next adjustment. Next. Check issued. Not presented or cleared. So check issued. When check is issued, money went out. Okay. Money has gone out here, but money has not gone out here. Okay, right. So check issued, money has gone out. Money has gone out. That is why our balance as per cash book would have been lower. Okay. But money has not gone out there. Now from cash book, when I want to compare with that, what should I do? Oh, for me I already deducted, right? Now that person hasn't deducted. Now I need to add back. So add back. Okay. Then what will we do if we are starting from passbook and going to cash book? In passbook it was not deducted, but there it was deducted. Oh, if I have to match these, I should deduct in my passbook also. So then I need to deduct this in my passbook. That's it. Then check directly deposited by customer in the bank account. You can say direct deposit in bank. Okay, direct deposit in bank by customer. Okay, so customer went to bank and added some money into bank account. Did we record? No, we didn't record. That is the difference. Okay, so bank recorded, we didn't record. That is the difference. Now if I am preparing BRS, what should I do? Friends, banker recorded. So if I am starting from cash book, so I am saying I didn't record. Oh, you recorded? I will also record. So I should add to my records. Okay, so I should add to the BRS what I am preparing. Then if I am starting from bank passbook and trying to go to cash book, we are saying, hey, bank passbook, is it recorded? Recorded. It got added. But did you add? No, you didn't add. Oh, because you didn't add, I want to make our balances same. What can I do to make the balance same? I should subtract that so that the balance will be same. I am repeating, banker recorded, but we didn't record in our books. So if we are starting from our books, we are saying, oh, we didn't record. Oh, you recorded? Bank recorded, we didn't record. So what do? You added that, right? Okay, let me also add that in my records. So that is what I am doing if I am starting from cash book to go to passbook. If I am starting from passbook to go to cash book, I am saying, oh, I recorded. Did you record? Oh, you didn't record. I recorded. Acha. So then I will subtract it so that our balance will be same. You know, if I just compare this with one of the ways in which our elders tell us, if there are differences, don't first try to find out what is the mistake with the other person. First introspect, think about it. What can I do? How can I change myself so that we can make sure that those fights are not happening or those differences are not happening. So something similar. Oh, so there is a difference. What can I change to make our balance same? So like that you are trying to do a simple logic. Okay, right. Then move on to the next one. Interest is directly credited by the bank. Some interest directly is credited by bank. Interest credited by bank. So something came into our bank account, it did not come here. That's the problem. Something came into bank account. Okay, let us start. Cash book, passbook. Something came into bank account, it did not come into cash book. Oh, something you came into bank book. Something came in. We didn't record that. No, we didn't record that. Okay, right now let us record that. So you will add. That's all. Then if you are starting from passbook to go to cash book, okay, in passbook, we recorded. Oh, you didn't record that? No, we didn't record that. Oh, but we already recorded that because, you know, interest we have credited. Oh, we recorded means we added, you didn't add. Okay, we will subtract. So here we will subtract. Understood? Then let us move to the next one. Sometimes we tell our bankers something called as payment instructions. Basically, you know what will happen? These will result in automatic debits. My telephone bill, 300 rupees every month, should automatically be debited from my bank account and should go to, say, Airtel, Vodafone, whatever. So it should be debited here and it should go to that company. So I gave an instruction to my banker. My banker is following that instruction. Similarly, I said some 10,000 rupees I have to pay EMI for purchasing of, or for house what I purchased. So that 10,000 rupees debit from my account and you transfer to so and so. Like that, if you have given standing instruction, then banker will silently just keep doing that. So as long as you have money in your account, that money to that extent as per the instruction will get deducted and will go to that person in whose favor you gave that instruction. Okay. Now what would have happened? Amount went out here, but here it did not go out. That is a problem. Alright. Now in cash book, has it gone out? No. In bank book, in bank passbook, has it gone out? Yes. Oh, you paid. I didn't pay. Achha, I didn't record that outflow. Okay, I will record that outflow. So when I record that outflow, amount will go down. Then if I start from bank passbook and try to reconcile that with cash book, so I'm saying, okay, I deducted that and I paid out. So did you record that? Oh, you didn't record that. Okay, so then I recorded that, you didn't record. So what can I do to make balance same? I recorded, that means what? I deducted. I deducted, you didn't deduct. If I add back, then our balance will be same. So I'm saying add back. That's all. Then sometimes bankers levy charges. So bank charges. Okay, right. When bank charges are levied, what will happen? It will go out from our bank account. Did we know that? Oh, we didn't know that. Banker has transferred some money out of our bank account towards bank charges and banker took that as income for bank. Okay, right. Now what happened? How do we reconcile this? I am in the cash book to passbook. Did I record? No, I didn't record. Bank passbook, is it recorded? Yes, outflow. Oh, you moved out. Okay, that's the reason why there is difference. You made it as outflow. I should also record that. I will also show it as an outflow. That's all. Then, if I am starting from bank passbook and trying to arrive at cash book, then I am saying, I made an outflow towards, or I recorded an outflow towards these bank charges. Did you record that outflow? Oh, you didn't record that outflow. I recorded. Acha, you did not deduct it, right? I deducted. So to make it same, what do I do? What do I do? I am not asking you to do anything. So what do I do? If I add back, then it will be same. Okay, so add back. Friends, even though I am saying, I am playing this double role of, oh, in this case what to do, in this case what to do. It is not that banker will do in one case, we will do in another case. No, that's all. In both the cases, we will only do. Just to reconcile, we may start from A to reconcile to B, or we may start from B to reconcile to A. But the overall moral of the story is, it's not that anyone else is doing it, it is up to us. We may start at either of the places and arrive at the other end. That's all. So that we know exactly why there are differences. Now, let us take another case. Locker rent. Charged by bank. So we didn't record that. Locker rent charged by bank. So you know these lockers, right? So to keep gold or some documents, banks offer locker service. Okay, right. Now when locker rent is charged by bank, it would have been an outflow naturally. So it would have gone out. Now that was recorded, but what was not recorded? Nothing was recorded here. Okay, so nothing was recorded here. Outflow was recorded, but nothing was recorded here. Okay, now what do I do? Here, if I am starting from cash book, so I look at it. I didn't record anything, you recorded an outflow. I didn't record anything, you recorded an outflow. Then, how do I align these balances? I should also record that outflow. That's all, subtract. So, I should subtract in the bank reconciliation statement. Then, if I start from passbook to get to cash book, in this side, now I deducted that. Oh, you didn't deduct that. Achha, how do I balance it? You didn't deduct, right? But I deducted. I should add back so that our balance will be same. Okay, I will add back. That's it. Then, move to the next one. Maybe there was a wrong entry by bank. That's also possible. So, what banker has done is some wrong item banker deducted. Okay, right. Now this is wrong. First of all, please understand, something wrongly was deducted. It is not like a locker rent or some standing instruction, etc. Something wrongly banker deducted. Okay. Now I want to reconcile the difference. Please understand, we will make sure banker is correcting it. Okay, there is no confusion about it. We will make sure banker is correcting it. But how do I know, first of all, whether that is the reason for difference? So something like, imagine my balance as per my books is 1 lakh, and this difference what banker has is 98,000. Now some 2,000 rupees wrongly banker deducted. Now how do I know whether that 2,000 is only the reason for difference between what we have as per our books and what banker has as per bank passbook? How do we know? For that we are trying to do this reconciliation. Understood? I am repeating, friends, get the logic right. There is a mistake made by bank. We are not saying that is right. That mistake is made by bank, and there is a difference between what balance we have as per our books and what balance banker has as per the bank passbook. Now what we are trying to check is whether that mistake is the reason for this difference. That is what we are now trying to check. Okay, so how do I reconcile then? Okay, so if I start with cash book. So in cash book, did we deduct that? No, we didn't deduct that. In passbook, was that deducted? Yes, that was deducted. Now to make sure that we reconcile, we will say, okay, if I deduct that in my from my cash book balance, that should be alright. Now just because I am saying if I deduct it, our balance is matching, it does not mean I will actually record minus 2,000 in our books. No, I will record this and say, now I understand. So from 1 lakh, if I subtract this 2,000, I now come to 98,000. This 98,000 is matching with you. Fine. Now I understand the difference. Reverse those charges. So I am not saying that number is right. I am not saying that number is right. I am saying now I understand why we have difference. To make sure I understand the difference, I have done this calculation. But now I will tell the banker that is not acceptable. You make sure in the coming year, when you are when in the coming period, immediately you have to correct that. So maybe in 1 week or so you have to correct that. So we are going to tell the banker, please be clear. I am not saying I will change my cash book. I am only saying I will record that in the BRS. I am not saying I will record it in the cash book. I am only saying that I will record it in the BRS. That point you need to understand. Because somebody made a mistake, I will not make a mistake because of that. But if somebody made a mistake, to know why our balances are different, I can make this BRS and make sure, because of that only our balances are different. I hope you got that point. Okay, right. Now, if I start with bank passbook and if I am getting to cash book, what do I do then? In bank passbook, that amount was already deducted. In cash book, it was not deducted. So here, if I add back that amount, then the balances would be same. Okay, right. Now, friends, I hope you got a clarity on what this logic is. Friends, instead of a wrong debit, now let us change the example. There was an item wrongly credited to our bank. Some 10,000 wrongly credited. See, imagine such good days if they come ever. Suddenly, you get a message on your phone. Banker credited. Why 10,000? Because we can dream of it. 10 crores bank credited into our bank account. We don't know why. Immediately, stopping the class. Immediately, you will pause the video, stop the video, throw the phone, run and immediately draw whatever amount is there in that account because suddenly you got a credit. Now, listen. So, there is a wrong credit of 10,000 rupees in your account. Then, if there is a wrong credit, what would have happened? Think about it. Here, wrong credit, say maybe this is 1 lakh. And as per our books, it is only 90,000. That 10,000 say is because of this wrong credit. Okay. Now, what do I do? So, this wrong credit in bank. Wrong credit in bank. Okay. For some reason, it should have been credited to some other account, it got credited to our account. Okay. Now, if I am starting from cash book balance is 90,000. Okay. It should have been 90,000. Oh, but what are you recording? 1 lakh? Oh, what is the reason? Some extra credit you took. Okay. So, if I add that 10,000 to check, okay, fine. That is the only reason why our balances are different. I understand. So, that 10,000 is the reason. I am not saying that I will add 10,000 in my books. No, that I will not do. I will not add 10,000 in my cash book. I am only saying that for the purpose of bank reconciliation statement, I will add 10,000 and see whether that is only the reason for this difference. And then, well, to be good, honest citizens, we should communicate to the banker that that is a wrong credit which came to our account and that such amount should be taken back. Okay, right. Then, if I start from passbook, in passbook it is 10,000 more, there it is 10,000 less. So what do? I will subtract that so that the balances match. But friends, just remember, if there is a wrong credit, I am telling you sort of an example and an experience personally. If there is a wrong credit, I don't want you to ever draw that amount and use that amount unless you really know what the source of that amount is and whether you are the one who is entitled to receiving that amount. Because what if that amount came from a wrong source and maybe you didn't know that, but amount came from a wrong source and just because it came, you have drawn that amount and you started using it. And what if maybe today we are in a world where it is so much vulnerable to different risks. You know, it could be risk on account of some antisocial elements or maybe risks on accounts of cyber frauds. So it is good, if it is not your money, don't touch it. Whether it is in your bank or whether you just see some money lying on the road which doesn't belong to you, you are not expected to have that kind of feeling that, oh, if it is easy money, let me pick it up. It is proven again and again and again and again that easy money will take away with it more hard-earned money. If you try to steal 1 lakh rupees from somebody, then your hard-earned 1 lakh rupees also you should add and pay 2 lakh rupees to somebody. So now that's not philosophical, but the point is, even from a logical perspective, it will not give you peace of mind, probably it will add to your anxiety, it will add to some bad habits you might pick up because you got easy money. Because with hard-earned money, it is difficult to just splurge and just waste so much money because you really know how you get that. But if people just get money easily, there is always a risk of people just splurging it, indulging in all wrong practices and, well, for all you know, ruining life in many ways. Anyway, coming back, so here, wrong credit in the bank account. So what are you doing? This is the kind of reconciliation what you're supposed to do. Friends, now let us look at another scenario. Maybe there was a wrong debit in cash book. So wrong debit means some inflow was considered but actually there is no inflow. Then what do? So in cash book, when we are talking about it, cash book to passbook, here we should reduce that. In passbook to cash book, so there some inflow was considered. What do? I might just have to consider. That was wrongly done. Okay. While we just do this in the statement, in reality we will ask our accountant to say that, hey, you should reverse this. So make sure this error is rectified. Okay. Right. That is what we would ideally do. Then there might be some mistakes in terms of totaling, etc. All that you need to do is, see, there can be small items, different items. Identify what was done in the cash book, what was done in the passbook. That is the first thing. And make sure that you know whether the account, cash book has debit balance or credit balance. First you need to know that. And then accordingly you will make the suitable adjustment. Alright. Let us now look at this question. From the following particulars, prepare a bank reconciliation statement for Jindal Offset Limited. Balance as per cash book, checks issued but not presented, checks deposited but not cleared, bank charges, interest credited by bank amounts to so and so, balance as per passbook. So all these are given. Okay, right. So look at the spectrum. One is 2,40,000, the other end is 2,86,950. This is cash book, this is passbook. Either you start from here and go there, or you start from there and come here. One of the two we should do. Okay, right. Let us start from cash book. We will go to passbook. Okay. Bank reconciliation statement. Okay, right. Now, we don't have any specific information as to whether it is debit balance or not. You would generally assume it to be debit balance. See, when I say I have bank balance, nobody will say, oh, you have bank balance means bank gave you money or you gave money to bank. Nobody would say that. So, when I say I have bank balance, it is like my money is with the bank. Okay. So, by default, it is assumed to be debit balance only. Okay. Right. Now, balance as per cash book. Balance as per cash book 2,40,000. Then checks issued but not presented. To understand this, again we will make sure we have our logic with us. Cash book inflow, outflow, passbook. Okay, right. Checks issued but not presented. Checks issued means here outflow for us. There is no outflow. Okay. So that is where there is a difference. Checks issued for us, money went out, but they didn't record it. Okay, we need to add checks issued not presented. How much is that? That is 1,36,000. So we are adding. Next, checks deposited in bank but not yet cleared amounts to 90,000. Checks deposited in bank. When we deposit something in bank, we would have increased our balance here. But there, nothing came in. Okay, right. So as a consequence, what would have happened? Here our balance increased, there the balance has not increased. So this increase, there is no increase. We will reduce it now. Checks deposited not cleared. How much is that? 90,000. Then bank charges amount to 300. So here if you talk about bank charges, first let us remove the others what we discussed. Bank charges. In bank passbook something was an outflow. For us that was not recorded as outflow. So how do we reconcile? We will also record as outflow minus bank charges. How much? Bank charges 300. Okay, right. Next, interest credited by bank amounts to 1250. Something is credited by bank. We didn't record that. Something is credited by bank. We didn't record that. So they have, we don't have. So they added, we didn't add. We should also add plus interest credited. How much is that amount? 1250. Then, well, balance as per passbook, let us check by adding all these what the balance would be. So 0, 5, this will be, yeah, we are subtracting that, yes. So this will be 9, then okay, so we have to add those, subtract these. So that will be 6, 8, 2. So basically friends, check this now. Balance as per passbook, did we arrive at that? Yes. Now concentrate, very important point. This is not for your CA foundation examination, but without this point I will say that your learning of bank reconciliation statement will be incomplete. Now concentrate on this. You don't have to write whatever I discuss in the next few minutes in the examination, but you need to know that. Checks issued not presented. Whatever I have done, am I correct? Yes. Whatever bank has done, is banker also correct? Yes, because because it was not presented, banker did not account for it. So what I did is right, what banker did is right. So when will we both come together? It's just a matter of time. When it is presented in the bank, both our balances will be aligned. Okay, this is just a matter of time. Check deposited not cleared. My balance increased right away, but balance in the bank will increase only after it is cleared. Am I right in recording that? Yes. Is banker right in waiting for that time? Yes, banker is also right. So no problem. It is just a matter of time. Bank charges. Bank reduced that amount from our account. Now I did not record that. But tell me, Is it like I'm saying, oh, bank, you can't reduce or you can't debit any bank charges, you can't take any bank charges from me? Am I saying that? No. Why will bank do all the service for us? So bank will take bank charges. So this bank charges, I am not saying it is wrong. I am not saying it is wrong. It is fine. But I didn't record it. Why didn't you record it? I didn't know it. I didn't record it. Achha. Is there anything like over time we will reconcile? No, nothing like that. Now I came to know I should record it. So friends, this item of bank charges or interest credited, we did not record because we did not know. That's it. So these things need to be accounted. These things need to be accounted. When I say accounted, where should they be accounted? Accounted in the cash book. When? Not at the time of preparing BRS. After this, you have to actually account for these items, and ultimately after accounting for it, if you prepare BRS, after accounting for these two, if you prepare BRS, you might have only these two items. The other two items, there is no difference, we have accounted for it. But for the purpose of our examination, I would say that you will have to prepare all these points into BRS, because this is the reason why there is a difference between these two. But out of all these differences, some differences have to be adjusted by accounting for them, but the first two differences what you saw, there is nothing to account for. You don't have to change anything in your cash book. Banker doesn't have to change anything in the bank passbook. You are right, banker is right. Over time, the balances will be aligned, over time balances will match. So such timing points can appear in the BRS. But the ones like this which require accounting needs to be accounted in the cash book. So in the cash book in the bank column. That's what I mean by that. Okay, right. Anyway, this is more from your practical application of this concept. So coming back, so we made sure that we reconciled it. How simple it is, right? Now let us start from bank passbook and then arrive at the cash book. That way also we can do it. Let us see how that works. Say we are starting from passbook to arrive at the cash book. Okay, right. Balance. So we are talking about BRS. Balance as per passbook. That's given in the question, 2,86,950. Okay. Then check issued but not presented. Check issued means, so this is inflow, outflow, inflow, outflow. Check issued means here outflow would have been recorded, but here outflow wouldn't have been recorded. But because I am here, how do I reconcile to that? I will also record outflow because of check issued, not presented. Okay, right. I will also subtract that. I will see what will happen. Then check deposited but not cleared. Check deposited means they would have increased, but we wouldn't have increased till it is cleared. So what do I do? So here they increase their balance, but I didn't increase. So let me increase and see. I think it should match. So add checks deposited, not cleared. What is the amount? 90,000. Then bank charges 300. I reduced. Oh, you didn't reduce? Okay, so I reduced it and you didn't reduce. Okay, I reduced it, you didn't reduce. So fine, let me, because I reduced, that came down. I'll add back. Add back bank charges. So that is 300. Okay. Then interest, I added interest, but they didn't add interest. That's the point. Okay. I added interest, so you didn't record. Okay. So to align them, I am not removing interest from the actual passbook. Only in the bank reconciliation statement I am saying less interest. Interest is how much? 1250. I will subtract that. Okay. That's it. Let me check. 0, 0, then 0, 0, 0, 0, 4, 2. That's it. So 2,40,000, we exactly came to the cash book bank column. Friends, this is how you can either start from here and go there or start there and come here. Both are perfectly acceptable. Friends, let us look at another question. On 31st March 2017, the bank passbook of Namrata showed a balance of 1,50,000 to her credit, while balance as per cash book was 1,12,050. Okay, let us just plot this. Cash book, passbook, and what did passbook show? 1,50,000, and cash book showed 1,12,050. On scrutiny of two books, she ascertained the following causes of differences. She had issued a check amounting to so and so. Okay, fine. So there are reasons given. Okay, 5 points are given. Prepare a BRS. Okay, fine. We can start with cash book and go to passbook. Write down BRS, bank reconciliation statements. Balance as per cash book. Okay, right. Now, what is the balance as per cash book? 112,050. Then, what happened? She issued a check. So, let us just make sure we continue to remember the logic. Inflow, outflow, inflow, outflow. Right. Yeah, she had issued checks amounting to 80,000. 80,000 checks issued. So, 80,000 went out here. Okay. Out of which only 32,000 were presented. So, from here 32,000 went out. Okay. So, what is the difference? There is 48,000 which got deducted more, extra 48,000 got deducted more as per our cash book. It was not deducted there. Deducted here, not deducted there. What do we do to make it consistent? Add back. Add checks issued, not presented. How much is that? 48,000. Then next, she received check of 5,000 which she recorded in cash book but forgot to deposit in bank. So the next item, 5,000 rupees recorded here. 5,000 rupees not recorded here because that was not sent to bank at all. How will banker know that I received a check? Okay, right. So check received here, balance increased here, but their balance did not increase. How to make it consistent? Decrease. Minus check not deposited. So that is 5,000. Then next, a check of 22,000 deposited by her has not been cleared yet. So 22,000 worth check. Look at this. 22,000 we recorded here, but it is not recorded here. So what would have happened? Our balance increased by 22,000. Bank has not increased by 22,000. So we will decrease it. Check not cleared. Check not cleared yet. How much is that? 22,000. Then next, Mr. Gupta deposited an amount of 15,700 in her bank which has not been recorded in her cash book yet. So there is a person who deposited some amount here. Okay. So basically this increased, but this did not increase. Okay. That increased, we did not increase here. What do we do? Increase here also. Plus direct deposits. We call them as direct deposits, 15,700. Then bank has credited an interest of 1,500 while charging 250 as bank charges. So what bank did is it credited 1,500 interest, but here we did not record it. So 1,500 interest increased there, we didn't record. Let us also add interest credited 1,500. Then bank charged 250 charges, but we did not record them here. So bank reduced, but we did not reduce. Reduce now. Bank charges. So what are the bank charges? 250. Okay. Right. Now let us quickly calculate what this is coming to. 112,050 plus 48,000 minus 5,000 minus 22,000 plus 15,700 plus 1,500 minus 250. So that comes to 1,50,000. That's it. So that is the balance as per passbook. Now friends, had we begun with passbook, what do you think would have happened? You know, instead of cash book, I am just writing, had we begun with passbook, the passbook balance would have been 1,50,000. And whatever here we are saying in this BRS, you will add, that you would have deducted. Whatever you deducted, you would have added. So you would have done minus 48,000. Then you would have done plus 5,000, plus 22,000, minus 15,700, minus 1,500, plus 250. Then cash book balance would have been, let us check anyway, 1,50,000 minus 48,000 plus 5,000 plus 22,000 minus 15,700 minus 1,500 plus 250. That's exactly 1,12,050. Friends, whether you start from here and go there or start from there and come here, I hope you got perfect understanding of the logic of BRS.